Welcome to today's high-impact gold news analysis. We're breaking down the factors influencing the price of gold right now. Today, we dive into the recent price action, key drivers, and the significant macro events shaping gold's trajectory. Spot gold has rebounded following Monday's profit-taking, trading near $4,374.76 per ounce, up approximately 1%. This rebound is largely supported by safe haven demand from investors and a continuously weaker US dollar. Let's look at the high-impact news and geopolitical risks that are currently at play. Persistent geopolitical tensions in key regions, including Ukraine, the Middle East, and US-China relations, are fueling hedging demand, offering latent support for gold. All eyes are on the December FOMC minutes, due at 7 p.m. Greenwich Mean Time. Markets are seeking confirmation of a slightly dovish Fed stance, creating volatility risk leading up to the release. Analyzing the broader macro environment, we see a structural support for gold, despite current risk-seeking behavior in equities. Global equities are near record highs, indicating a risk-on sentiment. However, thin year-end liquidity, coupled with active geopolitical risks, increases market fragility and keeps the hedge demand for gold alive. The US dollar index remains flat near 3-month lows. The inverse correlation with gold remains intact, meaning a softer dollar provides stability for gold prices. US 10-year Treasury yields are slightly lower, reducing the opportunity cost of holding non-yielding gold, which is generally supportive for the asset. Now let's pivot to the technical analysis and identify the key price levels to watch in the immediate future. The daily trend for gold remains structurally bullish, showing a V-shaped recovery and higher swing lows. Price is holding well above the 200-day moving average. Gold is currently in a consolidation phase, oscillating between the price levels of $4,330 and $4,380. Critical support is established in the $4,330 to $4,350 zone. A strong rejection near these levels confirms market strength. Immediate resistance is visible near the $4,380 to $4,390 level. Acceptance above this range is key for further upside. Based on current analysis, let's explore potential trade scenarios and determine the overall market bias. A bullish move is confirmed if the price holds above $4,380, potentially opening the path towards $4,440 and a test of the all-time high. The bearish scenario is triggered by a decisive break below $4,330, which could expose lower support levels near $4,300 and $4,270. Our overall bias remains slightly bullish, with the $4,380 level being critical before the New York Open. Be aware that medium to high volatility is expected around the 7 p.m. Greenwich Mean Time release of the Fed minutes. Trade cautiously,